What's up, everybody? The Unremarkable Investor is back with another stock and investing focus video. In the previous video, I talked about what stocks are and how to invest into said stocks. Now, the next logical question one may have is, how do you determine what companies to buy into and which ones not to buy into? There's many ways you can figure out what stocks to buy and some pretty straightforward methods I've learned to use, and I'd like to share it with you today. So let's get to it. The easiest method that even a small child can do is to simply look around at the products in your house. You probably don't realize it yet, but most of the products that you own are produced by companies that are publicly traded on the New York Stock Exchange. Publicly trading is when a corporation sells a portion of itself to the general public through something called an initial public offering, or IPO for short. This allows anyone to buy, sell, or own shares of the company on the stock exchange. If the company is privately traded, it's usually accessible to be bought by accredited investors, institutions, and now, through newer regulations, the general public via crowdfunding. Though publicly traded stocks are the most accessible for regular folks like me and you. Now that that is cleared up, let's give some product examples. If you're in the bathroom while watching this, you'll most likely have toothpaste and toilet paper near you. If the toothpaste brand is Colgate and the toilet paper brand is Charmin, you have your first two stocks right there you can look into buying. If you go into your living room, you may see your Apple TV hooked up, and that's an Apple product. Maybe you're into video games and you have a Nintendo Switch, PS5, and an Xbox hooked up. Nintendo, Sony, and Microsoft are traded publicly on the New York Stock Exchange. So let's walk into the kitchen now. If you open up your pantry, I'm sure you have seasonings in there. If it's McCormick, you just found another brand that has stocks. And while we're talking about seasonings, most of the foods in your pantry are probably traded publicly also. Examples being Kraft Heinz, General Mills, and Hormel Foods, to name a few. Now, a quick note, not every product you see is going to show up as the name of the product on the stock market. What do I mean by that? I mentioned Charmin toilet paper earlier. If you look on your brokerage account for Charmin toilet paper stock, you're not going to find it. Charmin is owned by its parent company, Procter & Gamble. You'll find other examples of this in brands like Nestle, Darden Restaurants, and even Comcast Corporation. These are all publicly traded companies that have dozens of products that we use every day. So since we use these products every day, we must like them and understand their use. So to me, this is the most straightforward way of finding stocks to buy. Okay, so what if you want to do a little more in-depth research in searching for quality companies to invest in? A trick or strategy I used when I started taking investing more seriously is looking up the Fortune 500 companies. This list comprises the top 500 United States corporations by total revenue. Without getting into the financial statements of each company, which is a more in-depth scrutiny of them, I figured if a company makes it onto that list, they have to be doing something right. I figured all I had to do is to see if whichever company I chose was trading publicly, and if it was cheap enough, I would consider buying into it. Now, like I said before, I won't bore you in this video on how to read a company's balance sheet, but things like debt, profit, margins, and other similar terms do matter when it comes to a company's overall health. I'll save that for a future video. In the meantime, you should do a little research before you decide on buying into a company. Other online sites you can check out that are helpful are NASDAQ.com, Yahoo Finance, and MarketWatch, to name some popular ones. Websites like these show the biggest stock movers for the day, news occurring around the world that has an effect on stocks. They track the Dow, S&P, and NASDAQ, which are the three most closely watched benchmarks for the US stock market, and many more things. And so if you wanted to broaden your search for what to buy, this would definitely be a good way for you to do it. This strategy probably is the safest, non-risky strategy you can do. And if I'm being honest, most financial teachers that have experience with the stock market would have just said, just invest into ETFs, and the video would have ended. Now, why do I say that? ETFs, or exchange tradable funds, is an investment vehicle that pulls money from multiple investors to track a specific index, sector, or commodity. In simple terms, it's like buying a stock that has multiple companies within said stock. Popular ones include VOO, which tracks the S&P 500, VTI, which tracks the entire stock market, and QQQ, which tracks tech and communication companies. They also have ETFs that track certain sectors of the economy. So if you believe in a specific part of the economy, you can just put your money into one of these and let it do the work of picking stocks for you. And that brings up the reason a lot of the veterans recommend doing ETFs exclusively. it is passively or actively ran by someone else. The active ones are usually ran by portfolio managers that do research and select specific stocks to try and beat the market, while the passive ones like VOO just track the top 500 companies in the country. It takes the guesswork burden off of a new investor and gives them a stable and battle-tested fund to invest in. ETFs are easy to find. Just a simple Google search, go on to any of the websites I stated earlier, or just log on to any brokerage account you may have, and it should be under a tab or near the search bar. Regardless of how you choose to find the stocks for yourself, just find them. The sooner you can pick something, the sooner you can start your investing journey, and you can start to work towards whatever goal you may have for yourself. Do a little research on what you pick though, and don't throw all your money into one thing looking to get rich by tomorrow. Is it possible? Yes. Is it likely? Absolutely not. Ask me how I know. We come to the end of the video, and I appreciate you guys listening to me kind of show you guys how to find stocks in your surroundings, look it up online, or just let somebody do it for you with ETFs. I hope it was helpful. I hope it was knowledgeable for you. I hope it was beneficial for you. If you feel like you got something from it, like I always say, feel free to leave a comment, like, subscribe, or share it with your friends and family. This is Chris, the Unremarkable Investor. Have a good one.